Open your wallet and count the cards. Not the bank cards, the other ones. The coffee card with the stamps, the supermarket key fob, the pharmacy card, the airline number you can never remember, the app with the little gold badge you unlocked in March. Now answer one question about any of them. How much is it worth? You don't know. Not roughly. Not to the nearest 10. You have been collecting something for years, and you cannot name its value in your own currency. And yet that thing you can't price is quietly deciding which coffee shop you walk to. Start there, because it's the tell. There is almost certainly a closer coffee shop than the one you use. Maybe not by much. 2 streets, 4 minutes. And on some mornings you walk past it, to the one where the stamps are. Nobody made you. Nobody was watching. You did it because leaving that card unfinished felt like waste. That feeling has a name in the trade, and an entire industry is built on top of it. Here's the shape of the deal, stated plainly. You give them your money and your data. They give you points. Points are not money. This is not a technicality. It's the whole architecture. Money is a claim on the world. Points are a claim on one company. Money holds its value because millions of people fight over it. A point holds whatever value the issuer says it holds this quarter, and they can change it. Overnight, unilaterally, with a notification you won't read. They can raise the price of a reward. They can retire the reward entirely. They can let your balance expire because you went quiet for 12 months. Try that with cash. Imagine your bank writing to say that dollars in your account will be worth 30% less on Tuesday, and any dollar you haven't spent by December disappears. You'd move banks that afternoon. In a loyalty program, it's called a program update. So the first thing to fix in your head is the direction of the transaction. You are not being paid in points. You are lending them money in a currency they print, at 0 interest, with an expiry date they control. And you don't get to choose the exchange rate on the way out. Now, why do they want you carrying a balance at all? Because a huge slice of what they issue is never redeemed, and the industry has a word for that too. Breakage. Breakage is the value of points that expire, get abandoned, or sit forever below the threshold you need to cash them in. It is not an accident, and it isn't a rounding error. It's modeled in advance. Companies with large programs carry the outstanding points as a liability on the balance sheet and estimate how many will die unclaimed. And that estimate flows through as revenue. Read that again. There is a line in their accounts whose value goes up when you forget. The 1,000 points you'll never use aren't a failure of the scheme. They're the margin, which is why the threshold is always just out of reach. Look at how these things are actually built. The reward almost never sits at a number you can hit casually. It sits slightly beyond your normal rhythm. One more visit, one more shop, one more flight. Close enough to chase, far enough that a meaningful share of people stall out and quietly abandon a balance. Both outcomes are wins. If you push to the threshold, they got extra visits they wouldn't have had. If you stall, they got your money and never paid the reward. There is no version of that stamp card where the shop loses. And the stalling isn't left to chance either, because in 2006, 2 researchers worked out precisely how to stop it. Joseph Nunez and Xavier Drays ran a study at a car wash. Customers were given a loyalty card. Buy the washes, fill the card, get one free. 2 versions went out. The first card had 8 boxes, all empty. Collect 8 washes. The second had 10 boxes, but 2 were already stamped when it was handed over. A gift. Look at those carefully, and you'll see they are the same deal. 8 washes to a free wash, either way. Nothing was given away, but the numbers didn't come back the same. Of the people with the plain 8-box card, about 19% finished it. Of the people handed the 10-box card with 2 free stamps, 34% finished. Same effort, nearly double the completion. The researchers called it the endowed progress effect. People abandon a task they haven't started. They finish a task that's already underway. Hand someone a head start on something and it stops being a decision and becomes a thing they're in the middle of. And they didn't just finish more often. They came back faster as the card filled, accelerating toward the end, which is the second half of the finding, and the half that pays. Once you know that, you can't unsee it in the wild. The app that gives you a welcome bonus the second you sign up, you're not at 0, you're at 400, and now there's something to protect. The progress bar that appears already partly filled. The status tier you were upgraded to for free, that you now have to requalify for every year. None of that is generosity. It's the 2 free stamps. Which brings us to the part where it stops being about money. Once a program can rank you, bronze, silver, gold, whatever they call it, it isn't selling you a discount anymore. It's selling you a position, and positions can be lost. Notice what that does. A discount is a gain, and gains are easy to walk away from. Status is a holding, and holdings feel like they're already yours. The person on the gold tier is no longer chasing a benefit, they are avoiding a demotion. They will book the worst flight, at the worst time, at the higher price, to protect a rank that exists only inside one company's database. You can watch people spend real money in December, on trips they don't need, for a tier that will reset anyway. Every airline knows exactly what that month is worth. They didn't sell you a reward, they sold you something to lose. So let's put the machine together, because it only makes sense assembled. They issue a currency they control. They set the threshold beyond your natural rhythm, so you either stretch or abandon, both profitable. They hand you a head start so you feel underway instead of undecided. They rank you, so quitting costs you a position, and not just a coupon. And they book the forgotten balances as revenue. At every step, the thing being purchased is the same, not your money. They were getting that anyway. Your route. Because that's what the whole apparatus buys, and it's easy to miss while you're counting stamps. The point of a loyalty program has never been to reward the customer who was coming regardless. It's to make the customer who wasn't coming walk the extra 4 minutes. To make you drive past 2 supermarkets to reach the third. To make you fly the connecting route instead of the direct one. On your own time, for a rank you can't sell, spend, or take with you. You didn't earn points. You put down a deposit on your own loyalty, and they set the exchange rate. Every stamp is a small promise about where you'll shop next. That promise is the product. The free coffee is just the receipt. And the price of the deposit isn't only the walking. To run any of this, they need to know what you buy. Every basket, every hour, every repeat. That's the actual trade, a few % back, in exchange for a permanent record of your habits, precise enough to know when your household changed size, when your income moved, and when you're most likely to say yes. That data is worth more than the discount. It is frequently worth more than the margin on the goods. And it explains a detail you filed under nothing. The card turns an anonymous basket into a named one. Without it, a shop knows someone bought nappies at 8 on a Tuesday. With it, they know it was you. 4th time this month. Switched brands in March. Responds to a coupon within 9 days. That's not a marketing nicety. That's the asset. The discount is the price they pay to acquire it, and they are getting it cheap. You are not the one being rewarded for loyalty. You're the one supplying it. Now check your own life for the pattern, because coffee is the small version. The airline miles you're saving for a trip you haven't booked. The store card you carry to avoid the member price that is simply the real price with a penalty for outsiders. The app streak you're maintaining. The game currency you bought with actual money that can only ever be spent inside one company's world. Same structure every time. A currency they issue, a threshold they set, a balance they can devalue, and a rank you'd rather not lose. None of which means burn the cards. If you were going there anyway, take the points. That's free money. And refusing it is just pride. The move is smaller than quitting. It's arithmetic, and it's 2 questions. First, is this thing changing my route? If you are walking further, driving past a closer option, or flying a worse connection to feed a balance, you are paying in time and fuel for a discount, denominated in someone else's currency. Price that walk once, and most cards fail immediately. Second, what's the balance actually worth in real money, right now, at today's rate? Not the number on the app, the cash value if you cashed out this afternoon. If it's smaller than you assumed, you've learned exactly how much of the value you've been storing was ever really yours. Then spend it. The one strategy that never loses to a devaluation is a balance of 0. Sit with that one, because it inverts what the system trains into you. Every part of the design rewards hoarding. The tier you're protecting, the bigger reward 2,000 points away, the sense that cashing out early is wasteful. But points move one direction over time, and it isn't up. Nobody ever woke up to find their balance worth more than yesterday. So take the small reward now instead of the large one later. Not because the small one is better value on paper, it usually isn't, but because it's the one that actually exists. And if a program ever asks you to spend real money at the end of a year to hold a rank, you've found the clearest test there is. That's not a benefit anymore. That's a subscription with extra steps, and you're paying it to avoid a loss the company invented. So 9 cards, and not one number you could name. Now you know why. Nothing in your wallet was designed for you to know it. A currency you can't price can't be compared, and a currency that can't be compared can be quietly reduced whenever the quarter demands it. You weren't collecting rewards, you were being collected.